I look at the consumer spending and income numbers we got today. Spending down, income up. Yeah. That says to me that we're actually saving the money that we're earning here.
Yeah, it's actually quite interesting because what we found is that these gas prices actually have convinced more people to spend more money on gas. So they're not necessarily spending a lot more money in retail or restaurants right now, which might come later, but they are seeing lower gas prices, doing more weekend trips. Traffic into Vegas is up in the fourth quarter after falling most of last year. So right now it seems that people are spending the money a little bit, and what they're mostly buying is more gasoline.
Does that wind up translating, though, into more buying, say, at the retail level because there's a lag?
Yeah, historically what happens is there's an initial boost into gasoline purchases, and then maybe about a year later, after sort of the drop in prices begins, historical data shows that it filters out and the majority of the spending goes to retail, broad retail. So if you look at gas prices basically started falling in July of last year, that would put the second half about a year from then. So that's when we're expecting that you'll really see a boost to retail as a whole in the second half of this year.
Is this spending shift permanent? I mean, if we see another rise in gas prices, say if oil goes from 50 to 80, is it sticky, this spending?
That's usually not the case. I mean, the one interesting thing is that gas prices are supposed to stay low, relatively low, through 2015 and 2016, basically not getting above $3. So if those gas prices stay at that level, we could see a substantial sort of shift in consumer spending towards more discretionary purchases, more going out to eat, more clothes, stuff like that. But so far, we really haven't seen it. Even the CEOs of some of the chains you think that would benefit from this, like Family Dollar, said we expect it, but we haven't seen it yet.
It comes with a lag. And what's the total number we're looking at? You know, Goldman says $125 billion tax cut. I mean, when you look at the retail level, say the travel level, what are you seeing?
That $125 billion could equate to about $750 to like $1,000 savings per family
per year
for this coming year for the year we're in now. So it doesn't seem like a lot, but if you're someone living paycheck to paycheck, or if you're middle class, an extra $100 a month basically could go a long way.
And what about savings? You think we're going to save and not be stupid and save it instead?
Well, yeah. That's the thing. In the story, we talked to consumers across the country, and some were saying, I'm spending it now while it's low. Some saying, I'm not spending it at all.
All right, Matt, thanks so much. I really appreciate you joining me. Matt Townsend, Bloomberg reporter.